Greetings, everyone. This is Rena Hicks. I'm the Operations Director at Faida Investment Bank, and we are here and back to discuss the performance for July, August, and September 2025, Q3 performance for the Oak Special Fund. I am sorry, I've been away. The last time we discussed this, I was not around, and Ian was on his own talking about the fact sheet, but I am back and really excited to be here and excited to share what our performance is and just sort of do a deep dive so that you understand what our performance is.
Welcome back.
Thank you. Thank you. Happy to be back.
Yeah, happy to have you.
Yeah, so maybe just a reminder for those of you who may not know what I'm talking about. Oak Special Fund is a fund that is run by Faida Investment Bank. It is by what we basically do. It is a collective investment scheme that is regulated by the Capital Markets Authority. And today specifically, we are talking about Oak Special Fund. We have other funds, but today we're talking about Oak Special Fund and the performance that we've had. So basically, what we want to go through is the returns this quarter. So Ian, I'm going to ask you, how was Q3?
First, I want to clarify that you have Oak Multi-Asset Special Fund, Kenya Shilling Fund, and we have Oak Multi-Asset Special Fund, USD. For these purposes, we'll be discussing the Kenya Shilling Fund return, and Q3 was a mix of ups and downs, and I'm happy to say the changes that have come into the market and what we've been able to experience. But this is normal, and what we've experienced on Q3 is normal in special funds, in hedge funds, and in multi-asset funds. Yeah. So one of the things I want to say is we had a very big change in our asset allocation, driven by the market trends, especially the dropping of interest rates. Let me say the bit of flattening of the yields in the fixed income, and the uprise, a lot of uprise in terms of NSE securities, especially the NSE equities. So the Nairobi Securities Exchange has seen a boom. World markets over, including Africa, we've seen Ghana, the US, we've seen even Europe, a lot of uptake in equities, driven by the global change in dropping of interest rates.
Yeah. Actually, yes. It was very sharp last year. From about after September 2024, we just saw interest rates come down significantly, and that's what helped us in our returns last year, right?
Yes.
But then when you talk about the flattening of the yield curve, it's the fact that interest rates have come down, but now the rate of decrease has slowed down.
Yes.
And so even the opportunities have not been as exciting as they were last year. Do you want to talk a little bit about that?
Yes, and this one was significant actually for us, especially in July, whereby we were still holding a bit of a significant portion in fixed income, especially in Kenyan government securities. But we saw actually a slight rise in our yield curve as we moved from July to August. So what happened, because we were already holding several assets or several bonds, we actually had to recognize a bit of a revaluation loss. Not an actual loss, because we still intended to hold those papers, but due to the market value at that moment, we actually had to recognize a loss on that. However, what has happened in the market is with the decrease in interest rates, you'll see the standard companies, the listed companies, and even individuals are able to get cheaper loans. With cheaper loans, what happens? There is actually a boom in activity in terms of the companies, what they are doing and everything, and that it actually brings the valuations of the companies go up. Also, there is the reallocation of resources. Yeah. So there are people who were getting good rates last year. So you are able to go either a money market or a fixed deposit or a call deposit to a bank, levels of 14, 15, 16%.
Even T-bills.
Even T-bills. Right now, T-bills, as we speak, actually the 6 months and the 3 months and 6 months, they are below 8%. And still the 1 year is below 10%. Looking at that, they look for alternative places to place their money. And one of the quickest places is equities. So that is what has brought actually a boom. I would say a boom where Kenyan market alone has done, to dollar return, it has done 47%. The NSE All Share Index has actually done 47% return year to date for this.
Someone might be out there asking, then why didn't the Oak Special Fund do 47%? What are you doing with, let's talk about our return.
Thank you. I love that.
The difference with a diversified fund and how that then works,
Yes, I love that. I think we can first discuss about the fund, how it has performed, then we'll go to why, if NSE All Share Index has done 47%, why didn't we place all the money there? I think we'll go into that.
Okay, no
but
problem.
Before then, let's at least introduce people to what the fact sheet, why we are here, and what we usually do every quarter.
Okay, so maybe you can start us off since you were the one who finished off last quarter.
Thank you. You've let me lead, and it's usually your forte. But I want to first welcome everyone who's hearing us for the first time as we discuss the fact sheet. And what do we usually say about the fact sheet? First is to say, what's a fact sheet? A fact sheet is actually a summarized document, a concise document that discusses about a product. In this case, we are discussing the Oak Special Fund, a fund or a collective investment scheme that is offered by Faida Investment Bank and also licensed under the Capital Markets Authority. So this document is a quick read. It's only a 2-pager to just tell you what Oak Special Fund is, what are the features, how to get in, lock-in period and such, just a brief and even the historical performance. You may want to add?
Yeah, so I think in terms of our fund, now if we just come into returns, generally what happens is we have a target and the target returns are 20%. So let me just explain that. In life you have to have a goal, right? So all of us have goals. I want to lose weight. I want to lose 3 kgs. I want to put on weight. I want to put on muscle. Same way, right? We have a target and a goal. And our goal for this fund is to get to 20% per annum. So when we indicate on our fact sheet that our target is 20%, it's not a guarantee, that we will get to 20%. What we're saying is that is what we're targeting. So in our Q3 performance of 2025, we got an annualized return of 18.2% for that period, but in an annualized way. In terms of Q3 specifically, absolute return, we got a return of 13.65%. So now I'm going to ask Ian, this is the fund performance. If somebody had invested 1 million shillings, right, in January of this year, what would they have earned? Because we have, an average return of about 18.20 over the period. Now, that is, I'm sorry, actually, I gave the wrong amount. January to September is 18.2. Q3 return is 16.44. I'll just correct that. Again, Q3, that's July, August, September. The return annualized within that quarter is 16.44. But if you had invested from January to September, your return is 18.2. So again to you, Ian, if I'd invested 1 million shillings, what would I have earned by September 30th?
Okay, thank you for the question. Actually, for anyone who invested on the first day, assuming it would be possible, that is 1st of January 2025, being a holiday, you would have earned 156,765.38. That is the earning you would have had. And the question is,
absolute.
This is an absolute figure as at 30th of September. If you look at it as a percentage, and actually I want to use the word, as an absolute percentage, that's a 15.67%. And if it is annualized, we are assuming if the fund behaved in the similar way until the end of the year, that is an annualized rate of 20.90.
Okay.
That brings a question. So you're saying 1 million would have yielded this much, yet the fund is reporting 18.20. Why the difference? And I want to elaborate that. By requirement by the Capital Markets Authority, there is the formula we use to report the fund return. And the fund return is the average return for the fund as a whole, not as an individual. Yeah. And depending on when you invest, you top up, you withdraw, the fund on individual level may differ from the fund return. But we are looking at someone who put a fixed amount at the beginning of the year stayed throughout, no withdrawal, no top-ups, and what would they have earned? Because that actually is, when we say we are looking to give a return of 20%, we want the end client to get 20% after fees. That's what we want. We are not guaranteeing, it's a target. And just as Rina has said, that's a goal. So as much as we say the fund has given a return of 18.2, we are saying we are still in line with a projection of a return of 20% for the client, having surpassed that on the annualized return for January till September.
Yeah, thank you so much for that. And also just to mention, this fund is not a straight line. It's up and down and up and down. So for example, in July, which was the beginning of the quarter, the performance was not as great as the previous month. And so you'll notice our fund sort of, there's ups and downs. But generally, when you look at the returns in that period, we have a total of 18.2. So we'll stop there for now. And then we shall come back and look at what asset classes did we invest in? How did we perform, even per month, and so on. So we'll see you in a short while. Thank you so much.